Why are certain stocks experiencing unprecedented surges? In today's discussion, we delve into the market dynamics driving these volatile movements and explore the factors that may influence stock prices. Many have observed significant drops in big tech stocks recently, leaving investors puzzled about the reasons behind these fluctuations. Beyond daily news and financial reports, there are larger market dynamics at play that contribute to these erratic movements. Goldman Sachs predicts a substantial $9 billion worth of equities to be sold at the end of the month, mainly due to rebalancing activities. As a result, the last trading days of the month witness consistent selling pressure on various stocks. Notably, giants like Amazon, Nvidia, Meta, and others experienced a downward trend until the last 30 minutes of trading. However, a peculiar phenomenon unfolded during this timeframe, where these stocks surged unexpectedly. What explains this sudden shift? The anticipation of the first day of the month effect could be a key factor. Historically, the first trading day of each month tends to yield better performance for the S&P 500. This phenomenon is attributed to various theories, including fund activities and a self-fulfilling prophecy where investors expect a positive market day. Traders seeking arbitrage opportunities might exploit the expected uptick, resulting in a surge in stock prices during the last 30 minutes of the preceding month. As we enter December, a historically favorable month for the stock market, coupled with the recent rebalancing activities, traders might have anticipated a positive market sentiment. This could explain the surge in the last 30 minutes of trading. Speculations about the first day of the month effect can prompt traders to strategically buy stocks, aiming for short-term gains. Now, let's shift our focus to individual stocks that are making extraordinary moves. Take Honest as an example, where the stock price surged by 16.5% with no apparent news driving the momentum. Within the past month, Honest witnessed an astonishing 110% increase. Similarly, Fubo is experiencing an impressive 42% surge within the same timeframe. What factors could be contributing to these remarkable movements? Both Honest and Fubo were once considered potential bankruptcy candidates, reflecting significant doubts about their survival in the market. However, recent financial improvements and strategic moves have shifted investor sentiment from anticipating bankruptcy to viewing these companies as disaster stories. The trajectory of these stocks can be understood as they move from being perceived as catastrophic to bad, and potentially transitioning to just an okay situation. Understanding this trajectory allows investors to gauge potential future movements. If these companies continue to improve their financials, moving from disaster to bad and then to okay, subsequent quarters may see significant increases in stock prices. This process highlights how stocks can move rapidly when they are initially priced for the worst-case scenario and gradually show signs of recovery. Now, let's delve into the case of Fubo. Analyzing Google Trends indicates strong interest and suggests that Fubo may outperform expectations in terms of revenues, subscriber numbers, and profitability in the next quarter. The company's strategic positioning, along with favorable industry dynamics as people shift away from traditional cable services, positions Fubo as a potential beneficiary in the coming years. Consider the larger trend of consumers abandoning traditional cable and satellite services. Fubo and YouTube TV emerge as the primary beneficiaries of this shift, set to gain millions of subscribers over the next few years. With exclusive partnerships and strategic moves, Fubo is making itself a contender for a top position in subscriber counts. The potential for growth is immense, especially as these streaming services offer flexibility and features that align with modern consumer preferences. As we wrap up, it's crucial to recognize that the stock market is influenced by various factors, including market dynamics, investor sentiment, and industry trends. Companies once considered on the brink of collapse can make remarkable comebacks, illustrating the dynamic nature of the market. Investors need to stay vigilant, considering both short-term fluctuations and long-term trends to make informed decisions. What are your thoughts on the recent market dynamics and the surge in certain stocks? Leave a comment above and share your perspective. In conclusion, understanding the trajectory of stocks from disaster to potential recovery provides valuable insights for investors. Strategic moves, industry trends, and market dynamics can drive significant stock movements. As companies transition from being perceived as catastrophic to showing signs of improvement, investors can navigate the market with a more informed approach. Disclaimer: the content provided is for informational purposes only and does not constitute financial advice. Investing in stocks involves risks, and individuals should conduct thorough research and seek professional guidance before making investment decisions.
Before you go, help us by smashing that YouTube like button. And subscribe to this channel, so you won't miss any of our videos. This shows YouTube algorithm that you value our information. And it helps us spread the message. Sharing is caring.